record. Everybody will look at a chart and just for the sake of like, man, I'd like to have been short up here at the dead highs or short for this break, or you see the market come off and want to be short higher. Everybody's going to think that and want to do that. And there's nothing wrong with that. But if you just look in the upper right here, and you can see this NASDAQ, that's the market that you're looking at, fall out of bed. Okay. You could just see it. Let me rewind it. Sells off, next leg lower, next leg lower. So you get some nice downside where clearly at this point, you see the market is bearish. However, it's too late to, you're just wishing with respect to, I wish I would have got short up here or even in here. That's after the fact. What could have gotten you short? What could have been, excuse me, the catalyst so that it's not hindsight? And if you look at what I bring over in the chart here, you take a look at NVIDIA and you could see that it breaks down from right here, which helped the NASDAQ and the ES come with it. All right. That's number one. Number two, look at it come down in here. Where does it stop? This is objective. And this is in real time something that keeps you from feeling like it's random. It's not a coincidence that it stopped here and then bounced. It came in the middle of this congestion all in here from the last hour or two yesterday. And generally, in the middle of congestion is a good place for it to stop and find at least some medium term or short time frame support. And then it in fact does it. So you don't have to be short or involved in NVIDIA, but using that as an ancillary or as something to make better predictions, you could say, if I'm indeed short the NASDAQ, maybe I cover my NASDAQ short in an area where it might be support in the NASDAQ, but also support in a stock that affects the NASDAQ. All right. So if I bring this back, it's like, what could have got me? I'm going to bring it back even more. What could have gotten me short and then out in a actually it would have been back here. What could get me short for this move? But also, and just as important, what could get me out around here? Maybe you don't have support in this particular market that you're trading or something objective that can get you out of a winner. A lot of people have trouble getting out of losers, but also they have trouble getting out. We understand why you'd have trouble getting out of losers, but also people have trouble getting out of winners and hold on to winners too long and they become smaller winners, or they let winners turn to losers, whatever, or they get out of winners too quickly. But even if you don't have something, let's say in the market that you're short in, and you could then look at a good ancillary market and see why it would stop in their area, which that area is this area in the Nasdaq. And don't kid yourself, when the whole idea of finding a good ancillary correlated market is because it's correlating. There's some sort of lead lag. There's some sort of opportunity to be objective because there's a relationship that not everybody is using. That's why it's helpful. So if you said, I think NVIDIA is going to find some support, and so I begin to cover a short you might have in the NASDAQ in here, and then wham, it rallies out of the hole that if you didn't do it, you'd have been stuck and you would have had your winning trade be less and less of a winner. And you're like, I got greedy and everything else. It's not necessarily got greedy. It's that you didn't have something that was objectively going to get you out and be kind of okay if you were a little early, but it made sense. And for the most part, it's a good idea to get out there because a market that is affecting your market probably is going to bounce. And if it bounces, for sure, the market you're short in is going to bounce. Now you're tying in a lot of rationale and logic that allows you to get and stay objective. What we're all trying to do here is to read the subjective, read the emotion, but be objective in our approach to it.